Good morning, everyone. On behalf of AML India team, I, Jyoti Maheshwari, welcome you all. To manage the financial crime exposure, the IFSCA, the International Financial Service Center Authority, mandates the regulated entities to develop and implement a robust AML risk management framework. In today's session, we will take you through the compliance roadmap developed in accordance with the IFSCA, AML, CFT, and KYC guidelines. We have a seasoned AML expert with us today to enlighten us on the subject. I am pleased to present you Ms. Dipali Vora, a qualified company secretary with 7+ years of experience in handling AML compliance and corporate governance. With her deep understanding of AML measures, she has already delivered personalized AML compliance training to hundreds of people across various jurisdictions. Her in depth knowledge and experience of years make her session empowering. Before we get into the session, I would like to inform you that this session will be recorded and will be uploaded on our YouTube channel for further references. All the participants will get the attendance certificate post this session. Yep. So without much ado, I'll pass on the baton to Dipali. Over to you.
Thank you so much for the introduction, Jyoti. Very good morning to everybody who are present here. So not wasting any time, let's just hop on to the topic. So today, as mentioned by Jyoti, we are going to discuss about the AML framework in India. So let's look at the regulatory framework which is there in India when I talk about the rules, regulations, guidelines which are there in India. So the first act was the Prevention of Money Laundering Act 2002, which was proposed. It was made effective in India on July 1, 2005. This act was actually, it aims to prevent money laundering and to provide for confiscation of property which was derived from the money laundering activities. Now, this act also aims at combating with financing of terrorism and other illegal activities by establishing measures in order to deal with money laundering as well as financing of terrorism. There were certain other rules and regulations also which were enacted in order to mitigate this risk, like Prevention of Money Laundering, Maintenance of Record Rules 2005. There was also this act called as UAPA Act, which primarily aims and talks about the punishment of terrorism related activities, including the financing of terrorism. So the gist is none of the acts are read in isolation. The recent guidelines which were issued with respect to IFSCA, okay, there also reference of PMLA Act, maintenance of record rules, UAPA Act, Weapons of Mass Destruction and Delivery System Act 2005 was also referred. So cross-referencings are already done in the law. So in IFSC, how to implement sanctions. That all is, somewhere or the other, the reference of the different acts which are enacted by different authorities are also referred. So before I discuss with respect to the compliance framework in IFSC, let's first understand what is money laundering. A very brief introduction on what is money laundering and what is financing of terrorism. Money laundering is basically an act through which black money is converted into white money in very simple language. Okay, so the basic idea of doing money laundering is to make sure that the source of money appears to be legit and not illegal. Money laundering is basically, done when you are earning something from illegal activities, but you want to show it to the world that no, this is my business income so that you can use the money freely. So that is the basic motive in money laundering. One of the key characteristic of money laundering is it starts from the person and it ends also on that same person. Like if I have earned something, I'm going to follow some processes which are known as placement, layering, integration, and after that the money will again come back to me, but the source will be changed. So then I can use that money freely. So that is the concept called as money laundering. Money laundering, like in the money which is involved in this process, is always the money which is earned through illegal means, and that is why we are the person is mandated to go through this process. And the second concept, that is financing of terrorism. Now if I had to compare money laundering and financing of terrorism, there are key differences. Like money laundering is a circular process, The money will again come back to the same person. But in financing of terrorism, that is one-way street. Money once invested is never going to come back. The money which is used for financing of terrorism might always not be an illegal money. Like there are a lot of such non-profit organizations, charitable institutions, and in various other means which are used as one of the medium to finance terrorism. So people are actually donating the funds. People might be thinking that they are donating funds for some good cause, but actually they are financing some terrorist activities. This could be done intentionally or unintentionally, we might not know. But there are certain organizations which are primarily just for financing of terrorism. So these two concepts, ML and FT, are looked at as one of the, the enemy for the development of a country. So in order to mitigate the risk, various rules and regulations were formulated in order to mitigate this risk and save a country from this ill effects. So recently, what the IFSCA acts have been enacted, this new SEZ zone which is formed, there are so many rules and regulations which are applicable. One of that is AML compliance. So there are some rules and regulations which the regulated entity are required to follow. First and foremost, registration on FINGATE. FinGate is basically a medium which is, created by Financial Intelligence Unit that was formed by the Government of India as the central national agency who will be responsible for receiving, processing, analyzing, and disseminating information with respect to all of the suspicious transactions which are filed by the regulated entity. So it's a central point where all of the suspicious activity or attempted transactions which might appear to be suspicious are reported. So if I look from the point of view of FIU, they will have complete information that in this region how many suspicious transactions were reported and what was the primary reasons that people were filing suspicious transaction. So it would be easy for them to understand that which area requires more control or which area requires more stringent rules and regulations. The next step is appointment of a competent principal officer and a designated director. So as per the law, the regulated entities are required to appoint a principal officer and a designated director who will be at a managerial level, okay, and who will be responsible for looking at and making sure that the entity is compliant with the AML regulations. When I say compliant with the AML regulations, I mean it's their responsibility to make sure that they have proper policies in place, proper customer due diligence is being done, wherever required, ongoing monitoring, overseeing ongoing monitoring, which we will discuss further, that what are these concepts. But their role is to make sure that a company is following the rules and regulations which are mentioned under the guidelines. After this, the next step is conducting enterprise-wide risk assessment. So before I go on to the topic of enterprise-wide risk assessment, let me explain you the topic of risk-based approach. Risk-based approach is something which all of the regulated entity are required to adopt in their organization. Risk-based approach means wherever there are more risk, the company is required to put in more controls. That by adopting that approach, they are required to conduct enterprise-wide risk assessment. If I explain enterprise-wide risk assessment, it's basically you are going to evaluate your entire company operations, or you will consider your company operations, you will consider the customers that you are dealing with what geographies you have your customers coming from, how are you onboarding your customers. So basically all of these parameters will be evaluated in order to understand that what is the risk of your own organization. Since you are operating in the Indian economy, how risky you are. Just to give you an example, if you are into a business where you are dealing with politicians, or if you're dealing with high net worth individuals, so the risk of your organization is going to be high because you have that kind of customers coming to you. Second example for this, it would be if your customers are coming from maybe some gray listed country which are high risk as per FATF. So of course the risk of your entire organization will be impacted because your customers are coming from a high risk jurisdiction. So At this stage, we will evaluate on the basis of our transactions that we have done in the past, that where are the customers coming from. That is your customer evaluation. Second is geographic evaluation, from what nationalities they are coming, what are the products and services that you are offering to them, how are you onboarding your customers, whether it is non face to face or face to face, like you will be able to see your customer, or it is just an an online account based, and just people keep on adding in your people just take up the services. How is your onboarding process that you're following in the organization? So this evaluation, after this evaluation, you will come to know that what is your risk. If you know that okay, these are the following risks, what is your action plan to deal with that risk? After making sure that your action plan is okay, good to go, whether it is strong, it is efficient, now what is the leftover risk? So after this calculation of your company's risk, you will come to a conclusion that my organization, my company is of low risk, medium risk, or high risk, depending upon the factors which I just mentioned. Customers that we deal with, geographies from where they come from, what are the products and services that we are offering, and how are we onboarding them. So all of these factors will contribute to the final risk, enterprise-wide risk assessment of your company. Once this is done, EWRA will act as a basis for you to draft your AML CFT policies, procedures, and systems and controls. So after completing EWRA, you will know that, okay, where is the maximum risk in my company? So after understanding that, you will be in a much better position to draft your anti-money laundering policies, procedures, or, putting up controls in your own company. So this is the EWRA and policies framework. This is basically the documentation that you need to keep in place in your company. Now, the next step, if you look at the customer due diligence, this is how you're putting in practice the policies that you have adopted in your organization. So first is customer due diligence. You have to make sure that the customers that you're going to deal with, be it an individual, be it a corporate, you have to make sure that you are asking for their ID documents, address verification is being done correctly. Also, here we are also required to put some like not only the customer, but the ultimate beneficial owners who are associated with that customer, you are also required to do the due diligence of them also. Like the one who are holding more than 15%, 10% accordingly. There are various percentage which are mentioned in the guidelines that for a particular type of an organization, who will be the UBO. So we have to look at that regulations also. So proper KYC is to be done. You all must be knowing the concept of OVD, officially valid documents. So that is something that you need, like that is something very well known. You can just stick to that and ask for the required documentation. Also, with respect to foreign nationals also, you have to make sure that you are asking for their passport or the voter's ID card from that particular jurisdiction to which they are belonging. Once you have completed the customer due diligence, the next step is sanction screening. Sanction screening is basically where you are going to screen that customer against the MHA's banned organization list as well as the UNSC designated persons list. So this is the list which is being issued by UNSC. So most of the persons who are belonging to terrorist group of terrorist organizations names would be available here. So you have to make sure that you are not dealing with these kind of persons, and in case if you come across, okay, you have to make sure that you are reporting it to the central nodal agency. The required provisions are already mentioned in the guidelines. Once sanction screening is done, you will come to know that what is the profile of your customer. Because once you take the documents, you will screen them, you will know what nationality they are coming from, what products or services they wanted, how did you, onboard that particular, like how did that person came to know about you. After collating all of this information, you will be in a position to assess your customer risk. So risk assessment happens at two levels. Once we discussed at EWRA level, where we understand our company risk. The next risk assessment is done at the customer level. If I am your customer, I am coming to you for some kind of services. You will ask for my KYC documents, you will screen me, and after that, you are going to assess the parameters like what is my nationality, how did I came to know about you, how I'm proposing to make the payment to you. So these are the examples that factors would be considered by you in order to assign me a risk, whether I belong to low risk, whether I belong to medium risk, or I belong to high risk. So all of the customers who are coming to you, you are going to bifurcate them in low risk basket, medium risk basket, or high risk basket. And accordingly, the type of due diligence that you will apply will be decided. For low and medium risk, it could be normal CDD or it could be simplified CDD. But for high risk customers, you are required to apply ECDD, that is enhanced customer due diligence. Now, when I say enhanced customer due diligence, that means you are going to apply due diligence measures in addition to normal customer due diligence requirements. That is address ID proof you've taken KYC form, you've screened them. But apart from that, what are the controls that you will put in? Like first, you will ask for source of fund, source of wealth, senior management's approval before you onboard that particular person as a customer. If possible, to make sure that the first payment is coming from their own account. Once you have onboarded that particular person as a customer, you have to make sure that you are continuously monitoring them. What are the type of transactions that they are doing? You should, after onboarding, you should just not leave them. You have to make sure that you're monitoring all of the transactions. If you see that there is a sudden, a graph is going up with respect to the transactions, you should be alerted. You have to make sure that you are verifying that transaction. Is there something, shady with respect to that? You have to make sure that you look at that aspect also. So this is the enhanced due diligence. So if I had to just sum up the customer due diligence, you ask for documents, you ask for KYC form, you screen them, bifurcate them into low risk, medium risk, or high risk. After that, the one who comes up to be as high risk customers, you have to apply enhanced customer due diligence measures. Okay, are we clear so far? Let's move on to the next topic, that is ongoing customer due diligence. When I say ongoing customer due diligence, this means the customers that you have already onboarded, who are your active customers, I would say. This also depends upon the kind of the business you have. If you have a sticky business, people are going to stay associated with you for a longer period of time. So at the time when you onboard them, you do risk assessment. When you do risk assessment, if you see that's low, medium, or high, on the basis of the risk assessment, you will come to know that when next the risk assessment is due. So as per the law, for all the low risk customers, you are required to reassess the risk every 5 years. For medium risk, you are required to assess the risk every 3 years. And for all high risk customers, you are required to reassess the risk every year. Now, this is the timeline which is provided by the law. But there would be certain other trigger points also which would warrant you to reassess the risk. Now, what are these trigger points? It could be there is an update in that particular customer's profile. Maybe when you screened a person, at that point of time, he was not in any sanction list. Okay, so but as a part of ongoing sanction screening, you came to know that some of your existing customers are now into sanction list. So of course, you will have to look into that. You will verify that and take a call whether you want to continue working with them. What is the risk associated with them, and then take a call. There is a possibility that any of your legal, any corporates that you are getting associated with, their name got changed, or new partners, new UBOs have been added. There's a change in the UBO. There is some adverse media with respect to the ultimate beneficial owner. Maybe there is an adverse media. Maybe they are a part of some financial crime which is making headlines nowadays. So all of these factors will also affect the timeline which is mentioned here, that at what point you are going to reassess the risk. So ongoing sanction screening and ongoing transaction monitoring is very important. Transaction monitoring is basically where if like your customers are making transactions with you or taking help of you in order to do some transaction, you have to make sure that it's in line with the requirement. If there is a sudden increase in the demand, or they have stopped having transaction, or there is some other unusual activity that you are looking at the time of monitoring the transaction, that would be one of the red flag. So there are certain systems like sanction screening software, transaction monitoring software are also available in the market. If in case if you want to implement that in your organization, you can set rules. Like for example, if I'm your customer and you have set a rule for me that if I am making a payment of more than 1 lakh in a day, maybe in small tranches, then that has to be flagged. This is one of the way in which you can monitor the transaction of a particular person. There could be some rules which you could set in your own organization depending upon the type of services or products you are into. So that is ongoing customer due diligence. Apart from that, if I look at the CDD update, wherever any of your customers trade license copy, certificate of incorporation has been, is I would say expired, or the passport has expired of any of your individual customer, you have to make sure that you're going back to them taking the latest one. So your like your customer file has to be updated at any point of time. The next step is identification of suspicious transaction. Now, before I talk about this, let me share with you that there is one more requirement as per the law, which asks you to maintain a list of red flag indicators. When I say red flag indicators, I mean what are the potential activities which could mean that this could be a suspicious one. So there has to be some list which a company maintains. And that particular list has to be updated on a regular basis as and when new typologies come up. Like if I say that okay, this is a suspicious one, that list is not going to remain same forever. New ways and means will always come up in order to with respect to suspicious transaction or the way people would launder funds or do financing of terrorism. It's not one rule or one type of activity that people will always follow. So according to that, we are also required to make sure that this red flag indicator list we have in our organization, as well as the same is updated on a regular basis. Now, the next step, we have done the customer due diligence, we have done the screening, we have started working with them, we are monitoring them on an ongoing basis. But there is also this requirement of suspicious transactions where there are 4 steps involved in that. In case in this entire process of working with a client, providing any services, if you feel that this person is little suspicious, the money which is involved in a transaction is suspicious in nature, or you feel that this money which is used in a transaction is coming from any kind of illegal activities, then in that case you need to follow the process, that is detect, ask, review and evaluate. Detect means you are looking for a particular red flag in that transaction. You will detect. You're going to understand whether this business relationship, this transaction, or this attempted transaction has any kind of red flag in that. That is the first thing that you will do, detect. If you find something at that point of time, you then move on to the next step, that is ask. Ask means you will ask certain questions. You will ask certain questions to the concerned customer. Okay, maybe about the transaction or their details, their identification details, but the approach that you have to adopt while asking questions has to be service approach. You have to make sure that we do not ask questions which would lead to tipping off, or that person would be alerted that why this person is asking so much questions, he might stop reverting to you. So that is very important, that when you reach at the ask stage, you may ask certain questions, but that has to be more from the service angle and not from the investigation angle, I would say. Once you have passed on the next step, that is ask, the next stage is review. Review means you are going to understand the profile of that customer. When you onboarded, when you opened an account, what was the risk classification? what was like, what is the type of the transactions that they are doing, what is the normal amount involved in a transaction. So these are the things that you will do at the review stage. After review stage, the last is evaluate. Once you have looked out for a red flag, you have asked certain questions from the customer, you have reviewed their profile, you will then be in a very better position to evaluate that whether you must file a suspicious transaction report or not. So at evaluate stage, you will decide whether you want to file it or whether you don't want to file it, or it doesn't warrant you. It is not that serious that it will, you will require to report with the financial intelligence unit. Might be at detect stage, like at ask stage or review stage, you might feel that no, it's nothing as such that you are thinking. You may stop the process there only. If need be, you can update the profile of that customer and leave that thing there itself. Once you have evaluated and you have made up your mind that no, I have to file suspicious transaction report, then you have to promptly, immediately file suspicious transaction report with the financial intelligence unit. Earlier, the timeline was 7 days, but in recent amendment, that 7 days was scrapped out, and now it's promptly. Now, once this is done, final stage is that you report it with the financial intelligence unit. Now, there is this record keeping requirement also, which is there in IFSC guidelines. You are required to maintain the data for a period of 6 years, minimum period of 6 years. Now, when I talk about record keeping and what documents to refer, all of the customer files, the transactions that you have assisted, the anti-money laundering policy, procedures, enterprise-wide risk assessments that you would have done for your company, then customer files, KYC files, risk assessment files, as a part of complying with the ongoing customer due diligence. If you have generated any such records, then that is also something that you are required to maintain for a period of 6 years. And the last stage is sharing KYC info with the Central KYC Records Registry. So this is something which is account based. So for example, if you have opened an account in one bank, if you are transferring it to another bank, you just have this a code which you can just transfer and your KYC would be done. So this is more for the banking industry, and this is applicable for the Indian residents only. So this is basically the framework of IFSC. But apart from that, there are some other obligations also which a regulated entity should make sure that they are complying with. AML training for the staff. The staff which is working in our organization is generally regarded as the first line of defense. First line of defense means they are the persons who are going to directly deal with the customers. So we have to make sure that proper training with respect to what is expected from them, that is they should be aware about that their company is AML compliant, that their company has AML policy, that what is the customer due diligence requirement, and the most important, they should know what are red flags, what is suspicious transaction, in what situations they have to reach out to the principal officer at the time of dealing with the customers. So that, it would only be possible to have a strong governance structure in the company if the first line of defense is strong. They are aware about the concepts of AML. They are aware about the obligations that the company has towards the required laws. So that is something which has to be done on a regular basis. Training for the staff is the responsibility of the principal officer. They have to make sure that, on a regular basis, the staff, the senior management is also made aware about what are the latest amendments, what are the laws, what are the obligations, what are their responsibilities. So that is something that has to be, taught to the staff, also required to, if required, even senior management should also be informed about their obligations. So just to talk, just as I just mentioned about the obligations of the senior management also have a key role to play in the, compliance with respect to anti-money laundering law. First is all of the AML policies, procedures, that all will be approved by the senior management. Also in the law, it is sometimes referred as the governing body. So that is something that even the high risk customers, when you onboard, prior approval of senior management is very important. So these are few obligations of the senior management which they are required to comply with. Apart from that, there are this requirement of periodic independent AML audit. So you are having compliances, we are following customer due diligence, we are wherever required, we are filing suspicious transactions report. But all of these processes are also required to be audited by an independent person, where they will see that how well the systems are in place, whether they are in line with the products and services, whether the EWRA which is conducted is considering the products and services. It is not something which is one format is taken, written, and just kept it. That should not be the case. It has to be customized. It should be according to that particular company's business operations and the customers. So that is the responsibility of the auditor who will be conducting the independent AML audit for a regulated entity. Apart from that, there are some other reports also which are available in the financial intelligence unit, like FINGATE. If you log in, you have certain reports like non-profit organization transaction report, cash transaction report, suspicious transaction report. So these are the types of the reports which are available when you log into your FINGATE account. So now let's look at the red flag indicators, these are general red flag indicators. So when you are onboarding a particular customer, if that person is not cooperating with you, or he's asking too many questions about why do you need this, why do you want that, no, that other person is not asking. This are actually considered as one of the red flags. If a person is not sharing source of funds, source of wealth, even being in high risk customer, so that is also one of the red flags. If there are multiple parties involved in a transaction, the payments which are made, in that also there are third parties involved which was not communicated to you in advance, so that was a surprise for you, so even that could be considered as a red flag. If your customers are coming from high risk jurisdictions, or those jurisdictions where the corruption level is really high, that is also one of the red flag. If there is any customer who is like, he's a corporate customer and there are like multiple subsidiaries, holding companies, making it a very complex business structure. Okay, and when you look at that, it feels that this is something which is not economically viable for them. It is actually created to have confusion, and a person should not reach to the ultimate beneficial owner. So in that case also, it could be considered as a red flag. Also, if suddenly the transactions have increased, okay, suddenly the value and volume of the transaction has also increased, even that could be considered as one of the red flag, which might warrant you to go through the process which is mentioned here, that is detect, ask, review, and evaluate, and then take a call that whether you should file suspicious transaction report with FIU India or not. So I hope this was clear. We have other, articles, infographics, AML videos, and publications which are available on our website. In order to get more information, you can just go to our website and you will find a lot of material there. If you want to, learn more about what AML is, how it is to be implemented.
Thank you so much, Dipali, for a wonderful session. And thank you everybody for sparing time at this hour on a busy working day. Hope this session helps you in enhancing the quality of your AML CFT program and comply with the IFSCA guidelines. As Dipali mentioned, if you are looking out for more resources on AML, do visit our website, amlindia.in. We'll soon meet you again with some more insightful webinars on AML. Thank you so much.
Thank you.